Warren Buffett is sitting on nearly $400 billion in cash. That's right, $400 billion. Berkshire Hathaway now holds the largest cash pile of any company in the world. To put that into perspective, Microsoft, a company worth almost $4 trillion, has only about a quarter of that amount. So yes, Buffett is holding 4 times more cash than one of the biggest tech companies on the planet. But the question is, why? Investors are worried. Berkshire's stock is slipping and Warren Buffett isn't buying back his own shares. So, what exactly is the world's most famous investor planning to do with all that cash? Over the past 6 months, Berkshire Hathaway's stock has fallen from about $530 per share to around $475. The biggest red flag in the latest quarterly report is that there were no stock buybacks. Buffett has always supported buybacks as one of 2 ways companies return value to shareholders. The first way is dividends, simple direct cash payments. The second is buybacks, when a company purchases its own stock, reducing supply and boosting the price. That's how Apple became the most valuable company in the world. It spent hundreds of billions on buybacks. So when Berkshire suddenly stops buying its own shares, it's a signal Buffett may believe his company is no longer undervalued. And that's exactly why some investors are getting nervous. Let's look at the numbers. Back in 2020, Berkshire had around $138 billion in cash. By 2022, that climbed to $167 billion. In 2023, Buffett went all in on US Treasury bills, nearly doubling his cash to $334 billion. Now, in 2025, that total has risen to $381 billion. But this isn't literal cash sitting in a vault. Most of it is parked in short-term treasuries, which can easily be converted back to cash while earning steady interest in the meantime. So Buffett isn't hoarding, he's positioning. Between 2023 and 2025, Buffett quietly changed strategies. Short-term treasury yields rose above 5%, which meant he could lend money to the US government completely risk-free and earn a 5% return. That's a simple, smart move. At 5% interest, $400 billion generates roughly $20 billion a year in income. That's real, risk-free cash flow. And since inflation hovered around 3%, Berkshire was earning a positive real return while everyone else was chasing overvalued tech stocks. But this strategy only works as long as yields stay higher than inflation. Now the Federal Reserve is cutting rates again, with short-term yields dropping below 4% while inflation remains stubbornly high. That balance is starting to shift. So why isn't Buffett deploying this mountain of cash into AI stocks or the tech boom? Because he doesn't buy hype, he buys value. If Buffett thought the market was cheap, he'd be buying. The fact that he's not tells you everything you need to know. He believes the market is overvalued and he's preparing for a correction or even a crash. This wouldn't be the first time. Back in 2008, during the financial crisis, Buffett made legendary moves, buying into banks, automakers and industrial giants at rock-bottom prices. Those deals earned Berkshire tens of billions in profits. Now imagine him doing that again, but this time with $400 billion ready to deploy. If Buffett is right and a downturn is coming, Berkshire Hathaway could make one of the most powerful investment plays in history. That's why he's waiting, not out of fear, but out of discipline. When markets crash, he'll be there with cash while everyone else is scrambling for liquidity. Buffett's entire career has been about patience, waiting for the right pitch, and when that moment comes, he'll swing, and he'll swing big. So what's the takeaway? Buffett isn't missing out. He's just waiting for his moment like he always has. The lesson for investors is simple. Patience beats panic. You don't have to chase every bubble. Sometimes the smartest move is to sit still and be ready when opportunity finally comes knocking. Want to know how we trade this major technology trend? At Truthsayer AI, we trade every single one of the alerts our AI generates. If you're interested, you can join the thousands of clients already using our app to capitalize on these trades every day. Remember, we trade every one of the alerts our machine learning and AI models produce. Sign up on our website, you won't regret it. Thank you for watching, and don't forget to like and subscribe.